The US stock market posts its first positive September gain since 2019, breaking a five-year trend of declines. Suez Canal revenues dropped by 60% as escalating regional tensions disrupt global shipping routes. And we look at the economic impact of Hurricane Helene and its effect on key US industries. Hello, I'm Toba Aydin with the latest business and finance news here on TRT World. US stocks ended September with a bang, with the S&P 500 closing at a new record high. September is typically the worst month of the year for stocks, but all three major averages posted monthly gains, and it was the first positive September for the S&P 500 since 2019. The S&P 500, Dow Jones and Nasdaq Composite all ended the third quarter in positive territory. Meanwhile, the US dollar gained against major peers after Federal Reserve Chair Jerome Powell pushed back against bets on more supersized interest rate cuts. He said to expect 2 more cuts this year. That is a quarter percentage point each if the economy performs as anticipated. For more, let's bring in Tim Waterer, Chief Market Analyst at KCM Trade. Good to see you, Tim. Now, September is usually a bad month for stocks, but this time round, we've seen some of Wall Street's best performances. What's driven this rally?
Good to be with you again. Yeah, that's right. September normally presents a seasonal obstacle for equity markets. Not the case this time around. I mean, markets did have a rocky start to the month before gathering steam. And I think we can really just trace it down to the fact that you mentioned there, the Federal Reserve. Number one, that they actually cut rates for the first time since 2020. So that was long awaited by markets, but also the size of the cut as well, going with a 50 basis point cut. So with the Fed moving to that easing policy, that normally translates into better economic conditions for growth, and globally equity markets reacted accordingly. So I think, what was encouraging was that it was quite broad-based, the gains that we saw during September. I mean, we've got used to this theme of, the tech sector being the outperformer, not so much the case this time around. So I think those broader-based gains that we saw during September, that's a healthy outcome moving ahead. But of course, could still have a few obstacles moving ahead. We're obviously moving up to a US election as well, so looking out for any potential October surprise. But yes, was a good, certainly a better showing by equity markets last month than what we've seen during the previous 4 years.
Right, and Jerome Powell has said to expect 2 more rate cuts this year if the economy performs as expected. What's the current market outlook?
Yeah, that's right. Jerome Powell is certainly preaching a message of patience. So, yeah, the Fed are looking themselves at, as you say, another 25 basis points, say in November, followed by another 25 in December, coming to 50 in total. A little bit of a gap between what the Fed expects and the market, though. Markets are currently pricing in around about 75 basis points of easing between now and year end. So that could be comprised of, say, a 50 basis point cut in November, 25 in December, or vice versa. So there is a gap there between the market and the Fed. So I think data going forward, and particularly this week, could determine who's right on that front. So I think, the Fed, they do have that dual mandate, inflation and labour. And so this week we'll get a number of key job indicators for the US labour market, culminating in the non-farm payrolls Friday. So I think the level of weakness or otherwise that we see in the data this week will determine, whether we do get, another 50 basis points of cuts by year end, or whether it's more towards what markets expect, which is more aggressive cuts from the Fed, and maybe 75.
And with just a month to go to the US elections, will this positive trend have any influence on voters?
Yeah, that's a good question. I think, the Fed, they do, try to be apolitical. And so, but I think certainly if the people are seeing, better economic conditions, looser monetary conditions, then that's a better feeling, I guess, for the public moving into an election. Now, of course, there are other issues, to be determined as well for the voters. But certainly, I think if you do have an economy in good stead and inflation at current levels, which is basically moving close to that 2% target from the Fed, that's a better position to be in going to the polls versus where we were, say, a year ago when inflation figures were north of sort of 5%. So whether it factors into the outcome in terms of who takes the White House in January, let's see.
Okay, Tim Water, Chief Market Analyst at KCM Trade, thank you very much for joining us.
Thank you very much.
Staying in the US, cleanup and recovery efforts are underway following Hurricane Helene. It's one of the worst disasters in years, causing severe damage and killing dozens of people across several cities. US President Joe Biden is expected to visit the affected areas to assess the damage. Usman Aliyu-Uba reports.
A devastated town. This is Horseshoe Beach in Florida, where homes have been reduced to rubble. It happens after the strong winds, heavy rainfall, and storm surges from Hurricane Helene caused catastrophic flooding in the Sunshine State.
Clearly, this is a similar story in this coast from probably Sarasota up through Pasco for sure, where you had feet of storm surge that caused a lot of these homes to flood, and that's going to require a lot of work, obviously, to get people back on their feet.
In North Carolina, Helene has left many either stranded or homeless.
We're going to continue this effort to make sure that we rescue people. These swiftwater rescues are going on now as we speak. The confirmation process on deaths is long and complicated. You got to make sure you notify family members.
The storm also affected the energy and power sectors, leaving millions of residents without electricity, and disrupted supplies across the region, leading to shortages at the pump. Locals say they faced hours-long queues at petrol stations.
It all depends on these gas stations. You're not going to be able to go nowhere, and it's just a scary feeling.
President Joe Biden says he hopes to visit the impacted areas this week if it doesn't impact the emergency response.
Yes, it's tragic. As a matter of fact, we're trying to get the exact number. My FEMA advisor is on the ground in Florida right now. There's a distinction between the numbers that FEMA's used and the ones that are used by the locals. So it really is amazing. You saw the photographs. It's stunning.
Helene has caused billions of dollars in damage across a wide swathe of the U.S., as well as killing dozens of people across North and South Carolina, Florida, Georgia, and Virginia. There are fears the death toll will rise as recovery efforts progress. Usman Aliyu-Uba, TRT World.
Hurricane Helene has caused significant devastation across the US Southeast, resulting in the deaths of at least 130 people. Businesses and critical infrastructure like power grids and roads have been destroyed. Even days after the storm, close to 2 million homes and businesses remained without power, and people still struggle to reach essentials like water and fuel. For local economies that depend on tourism and agriculture, the road to recovery looks steep as rebuilding costs continue to soar. Hurricane Helene is expected to be one of the most expensive storms in US history. According to Moody's analytics, the natural disaster could cost up to $34 billion. The impact includes property damage estimated at $15 to $26 billion and lost output from school and office closures totaling up to $8 billion. The storm hit several southeast states, causing severe infrastructure damage, particularly in North Carolina. Recovery efforts are underway, but the economic toll will likely be felt for years. The US recorded 28 natural disasters, each costing over $1 billion in 2023. The unusually warm year concluded with a record-breaking December. These events, including severe floods in California and a tornado in the Los Angeles area, resulted in nearly $93 billion in damages. The average temperature in the US was 12.4 degrees Celsius, making it the fifth highest on record. Experts warn that the climate crisis is bringing about more extreme weather with even higher costs. Risk modelling firm Verisk has warned that the global insurance industry should brace for average annual losses of $151 billion due to natural catastrophes. This estimate includes agricultural losses, a key factor in weather-related disasters. Without crop damages, the average loss is forecast at $119 billion. As the frequency and severity of natural disasters increase, the strain on global insurance systems may require significant recalibration to cope with the growing number of liabilities. Let's discuss this further with Ross Feingold, who joins us from Taipei. He's head of research at Cyrus Consulting. Good to have you with us, Ross. Now, how will the estimated $34 billion in damages from Hurricane Helene impact local economies, especially in states like North Carolina?
The states are confronting a very high rebuild cost, which is the number that people often focus on. What was the cost of the actual damages that need to be rebuilt, whether that's homes or offices, but also the lost economic output, the economic activity that's going to be paused and lost during the coming months is going to be in the tens of billions of dollars. So this is it goes without saying that this is a severe hit to the economies of the southeast part of the United States, and especially North Carolina, where the damage was so severe.
And what challenges do local businesses, particularly those in tourism and agriculture, face in the aftermath of such widespread destruction?
Unfortunately for the agriculture industry in this part of the United States, and specifically in North Carolina, they had already been facing, believe it or not, drought conditions earlier this year. So the drought had a very negative effect on crop output, specifically in North Carolina. And then they've had some heavy rains that led to mold on the crops. And now they've had this destructive storm come through in Hurricane Helene. So the loss to the agriculture sector is simply enormous. On the tourism sector, I suppose one thing we could say is that we're going into the winter season in that part of the United States, at least for North Carolina. So it was the low season was about to begin anyway, although obviously places like Florida, their high season includes the winter months for the northern part of the United States because people go to Florida for the warmer weather. So they are facing a significant economic loss both from agriculture and tourism.
And with 2 million homes and businesses still without power, what are the potential long-term economic effects on essential services and infrastructure?
You know, because of the frequency of storms, whether that's brought on by climate change or other factors, utility companies in this part of the United States, they do have a lot of experience with hooking up power in the aftermath of storms. So I would expect the power to be hooked up relatively quickly in some of the affected areas. However, what keeps happening is there's a storm, the power goes down, it needs to be fixed. And there's another storm and the power goes down and needs to be fixed again. So I think we'll see some conversation, some very serious conversation about how we could ameliorate the risk from storm damage to power lines, whether that's through the greater use of renewables or other strategies. But we are stuck in this recurring cycle of storms, loss of power, fix it, and then storms again, specifically in this part of the United States.
All right, Ross Feingold, we'll have to leave it there. Thank you very much, as always.
Thank you.
Now, a quick look at some of the other top business stories from around the world. Saudi Arabia has announced it expects a budget deficit of 2.3% of GDP in 2025, and this will likely increase in the following 2 years. Authorities say increased government spending and lower oil revenues will be contributing to their budget outlook. The Gulf Kingdom hopes to expand its economic reform to reduce oil dependency and boost tourism and business sectors. Google is investing $1 billion into Thailand to build a new data center and expand the country's cloud infrastructure. The move will see the company's first data center in Thailand, as Google hopes to expand into Asia. The move will support growing demand for Google's cloud and AI products in the country. Qatar Airways is planning to buy a 25% stake in Virgin Australia. The deal could shake up the market, currently dominated by Qantas. Qatar Airways has been looking for ways to increase its foothold in Australian markets. The deal would bring more direct flights from Australia to Doha, improving links to Europe. However, the deal is subject to approval and could face political resistance in Australia. And Australian retail sales jumped 0.7% in August, picking up from an upwardly revised 0.1% in July. Unusually warm weather brought early spring spending on items like summer clothing and outdoor goods. Sales hit $25.26 billion, a 3.1% rise on an annual basis. Analysts believe recent tax cuts may be helping lift consumer spending. Meanwhile, the Reserve Bank is monitoring whether the spending trend continues as real incomes improve. The Suez Canal is one of Egypt's most crucial economic assets, but has faced significant setbacks as regional tensions escalate. With a reported billions of dollars in revenue losses over the past year, the canal's vital role in global trade is being tested. This impact is felt not just in Egypt, but around the world as conflicts in the Middle East continue to affect shipping routes. Egypt has lost around $6 billion in Suez Canal revenue amid escalating geopolitical tensions. Canal revenue fell by 50 to 60% over the past 8 months, with disruptions to major shipping routes. The Suez Canal remains a vital artery for global trade and one of Egypt's main sources of foreign currency. Geopolitical tensions, including Israel's ongoing war in Gaza and Houthi attacks in the Red Sea, have disrupted Suez Canal navigation. Despite the challenges, Egypt's economic outlook remains stable, according to President Sisi. The Suez Canal is the shortest shipping route between Europe and Asia, key to global trade. Disruptions have forced ships to take alternative routes, leading to delays and higher costs. The ongoing regional instability poses continued risks to the canal's operational efficiency. For more, we're joined by James Hookham, Director of the Global Shippers Forum. Good to have you with us, James. Now, what are the broader economic implications of this revenue loss for Egypt?
Well, the total loss sounds significant, doesn't it? But the contribution of canal fees to the Egyptian economy is relatively small, about 2% of GDP. So although this is a painful loss, and I'm sure the Egyptian government would wish to see it restored as soon as possible, it's not devastating in terms of the overall scale of the economy. But what it is, and what is significant, is of course these fees are all paid in dollars, in US dollars, and that's a very valuable source of foreign currency to Egypt, and that is probably a more significant factor that the Egyptian government is having to consider.
Right, and if this were to continue for a longer period, could Egypt mitigate the long-term impact of geopolitical instability on its income?
Well, I think that's a huge factor in, no doubt, the considerations of the government, but speaking on behalf of importers and exporters around the world that are assessing the situation and trying to foresee a reopening of services through the Red Sea and the canal, I think given the events that have happened just recently in the region, I don't think any businesses are expecting a resumption of services through the Suez Canal anytime soon. I'm sure it's an important factor, but given the scale of and the potential for widening of the conflict in the region, I think this is probably not a significant consideration in the overall geopolitical factoring.
Right, and how are shipping companies adapting to the current disruptions in the Red Sea and beyond?
Well, as you said, the majority of shipping lines have rerouted their services around Southern Africa, so services from the Far East and Southeast Asia now reaching Europe and the east coast of North America via the Cape of Good Hope. That's been in effect since the December last year. It's added about a week to 10 days to the transit times for goods to reach those markets from the Far East. But by and large, that has settled down into a new scheduling arrangements now. Certainly businesses have factored that into their supply chain planning. There are still knock-on effects of that rescheduling that are rippling through the global container shipping industry. And some ports are still subject to congestion and delays because of the unexpected surge in traffic that they've experienced as a result of these reroutings. But I have to say, the issue that we're all worrying about in the shipping industry right at the moment is the strikes in the ports in the US. So that's going to add another further disruptive layer to how shippers organise international trade around the world.
Yes, and can you tell us more about those effects of the strikes in the US?
Well, as far as we know, the strike has started to take effect, and we can assume that most of the East Coast ports in the US will cease operations. They will stop unloading containers from ships or loading them on, and effectively the ships that and the cargoes that are in the ports will be stranded. There will be picket lines forming, and no doubt there will be difficulty in cargo being removed from the port. So this is going to be a big knock-on effect. You need to remember that container shipping services are more like bus services or train services. They're organised to a schedule, and therefore, if one part of that schedule is disrupted, it has these wider knock-on effects, whether that's on the US East Coast or, as we've been seeing and talking about, whether it's loss of transit through the Red Sea and the Suez Canal. So this is another further layer that will disrupt traffic. We've already seen increases in rates. We've started to see further changes in schedules. And I expect that this will intensify the problems for shippers and importers and exporters for the next few months.
Okay, James Hercombe, Director of the Global Shippers Forum. Thank you very much for joining us. A legendary game maker is about to make an even deeper connection to its fans. Nintendo, an icon for the ages, is showcasing its populist history in a museum, and fans of Mario, Zelda and the Game Boy console can't wait to press start. Nicholas Morgan reports.
A new adventure is about to begin for Nintendo fans. But this time, it's not in a video game. The Japanese gaming giant is opening a museum to showcase its incredible history. Nintendo began in 1889, making Japanese playing cards. Over the years, it has grown into one of the most famous gaming companies in the world. Now fans will have a chance to explore that journey and are already queuing to do so.
Today, we as game enthusiasts came here together to check in this new spot, Nintendo Museum. I feel very happy.
The museum will reveal the inner workings of some of Nintendo's most iconic creations. Visitors can relive the magic of the Game Boy, the Wii console, and the Switch. But fans are not just coming to look. The museum offers interactive experiences. Visitors can play Super Mario on an oversized family computer controller. It's a hands-on way to celebrate the company's most famous characters.
I hope that the opening of the museum will revitalize this town and spread the word about the good things about Uji.
Nintendo is not stopping at museums. The company has been expanding beyond video games. It's opened stores, created theme parks, and even brought its characters to life in films. With over 140 million Switch consoles sold worldwide, the company is still going strong. The museum is set to open its doors on October the 2nd, but tickets are already sold out for the next 2 months.
If possible, I would like to go and visit the museum, but I heard that people had to wait for 2 months to get a ticket. I think it would be difficult to get in even for locals.
The anticipation for Nintendo's next console is building. The company also set to announce details by the end of the financial years. As Nintendo continues to innovate, its legacy only grows stronger. Nicholas Morgan, TRT World.
For Japan's stock markets, it's been a roller coaster ride that eventually had to come down. The Nikkei and the Topics fell dramatically on Monday as investors react to Shigeru Ishiba becoming prime minister. But what does his coming into power mean for Japanese stock markets and the economy? Emre Boz has more.
Imagine borrowing from a bank and instead of paying interest, the bank pays you. This is what was happening in Japan. The Bank of Japan kept interest rates negative for 8 years, all in the name of boosting growth by motivating people to borrow and spend. It had an impact on Japan's stock market, with investors optimistic on the growth of the country's economy, with the Nikkei 225 hitting a record high in March this year. But for the land of the rising sun, the day for it to set also came. In May, the Bank of Japan began raising rates, and now Japanese stocks have taken a major hit. This is after Shigeru Ishiba won elections as the leader of the ruling Liberal Democratic Party. On Monday, the Nikkei 225 closed down 4.8% and the Topix fell 3.5%. But for these indices, this streak is just reflective of their negative trend. The Nikkei 225 in the past month fell by more than 2%, and the Topix saw losses of just over 2.5%. Investors are gearing up for a slowing Japanese economy, with Ishiba supportive of further hawkish economic policies, meaning further rate hikes and increasing taxes on corporations. And for Japan's economy, such policies may stifle growth. Increasing rates will reduce consumer spending by making the cost of borrowing more expensive. This is bad news for the country's economy, seeing 2 periods of negative growth since 2023. As Japan treads down this new path, we may not see the Japanese economic miracle anytime soon. Emre Boz, TRT World.
Well, that's all your business news for now. Thanks for watching.